Attention long-term investors. The market could be rolling over here, especially with the NASDAQ index. The technicals do not look good with the charts. And if Apple breaks, most likely these other companies and tech stocks are going to break as well. And especially if Nvidia is not doing well, you're going to catch a dip with these AI stocks. Okay, so be aware, because this is the time you want to take the contrarian view and start dollar cost averaging. When everyone's throwing these stocks out, you can start accumulating shares again. So it's probably going to be a dip here through September and into October, I bet, with the government shutdown possibly looming with that deadline October 1st. So like I said, ASML is one I like because they have the monopoly on the market with their EUV lithography. Also, I like Upstart stock at these price levels. I'm starting to accumulate shares under $30. That's one I think that has the room for the most upside. Once the Fed eventually cuts rates next year, that's when I think the stock will really take off. But those are just a couple I like right now. Obviously, Microsoft is a good one with the Chat GPT, right? And it's off of its highs. I expect that one to get moving again eventually. So these are just a few of the stocks that I like long term. And you got to take advantage of this AI revolution, getting a dip right now, right in September, with historically being a bad month. And like I said, a lot of stuff going on with Taiwan Semiconductor, with them delaying shipments. That's going to bring semiconductor stocks down, and also AI stocks with that. Like I said, especially since Apple and Nvidia have been falling. So like I said, this is an okay time to start dollar cost averaging, but you want to start slow. And like I said, as it goes lower, that's when you want to buy a bigger block of shares for each, 10% or so that it goes down. That's the way I play it. And that's, again, if you're a long-term investor.